Forward Guidance is brought to you by VanEck, a global leader in asset management since 1955. You'll be hearing more about VanEck ETFs later on, but for now, let's get into today's interview.
Wow, very glad to be doing this. Thank you everyone for turning out. Today are we talking about macro, so we're talking about central banks, interest rates, currencies, stocks, bonds, and that includes crypto. I mean, crypto definitely does respond. Kind of pretty correlated to the stock market, so that's why that's important. Today we've got Michael Howell of Cross Border Capital, Joseph Wang of FedGuide.com, Julian Brigden of MI2 Partners, and Johnny Matthews of Super Macro. Gentlemen, thank you so much for joining us. Let's start off with what is your current macro outlook on asset prices, and how does that depend on your view on liquidity, in interest rates, and the economy? Let's go down the line. Michael, starting with you.
Well, hi, good morning. Well, I think the answer is that since I believe wholeheartedly in liquidity, I've got to say that I'm optimistic, and asset markets generally are going to rise. Now, I put that in the frame of saying, well, maybe we could see a little bit of adjustment in the next couple of months. Markets have kind of become a little bit extended. But generally speaking, what you've got to look at is the long term. And the long term is radically different. And I can't keep emphasizing that enough. And the reason it's different is the fiscal situation worldwide in the West is so terrible, right? But the only way these governments can afford to spend and afford the commitments they've made is to start monetizing. And monetization is happening right now. And what I would say briefly, and we can come back to this, is the question to ask is, what is a safe asset? I'll tell you one thing, it's not a government bond. But that's what the authorities keep saying. Government bonds are safe assets. Think of this as an analogy. Go back to 1919, okay? After the end of the First World War and just before the German hyperinflation. What was the safe asset then? German government bonds, okay? How did that end? It ended really badly. The older generations invested in government bonds, they had their wealth wiped out. The younger generations saw the monetary inflation and they put money in the stock market. The question is crypto the new equivalent of the German stock market in a hyperinflation? And that's the important thing to think about, because it is.
Joseph?
Well, first of all, thanks for having me. And I agree with Michael's assessment. I think asset prices are going to do very well. They've done very well. We may pause, but I think we're going to continue to surge for the coming years. And my view is ultimately also based upon the fiscal situation. Now, the way that I look at this is, if you are a government and you are issuing a lot of debt, another way to look at that is basically you're printing money. For example, let's say if I gave you $1,000 in cash, well, that's money, right? But what if I gave you $1,000 in U.S. Treasuries, right? $1,000 in U.S. Treasuries, it's not as liquid as cash. Maybe I won't be able to buy dinner with it, but I could sell it for cash. I could borrow against it. It's an asset. So if you have a fiscal deficit in the U.S. of at least 5% for the coming foreseeable future, and similar situations in other countries, one way you can think about it is you're basically printing money. So fiscal deficit is basically it's going to be really uncontrollable going forward, and that's going to put upward pressure on all asset prices. Now, the other leg to this, I think, is that we're heading towards a global rate cutting cycle. Now, over the past couple of years, we had inflation go up throughout the world, and so central banks react very aggressively. But as we've seen inflation come down a lot, it's well telegraphed that we're heading into a global rate cut cycle. That could probably start maybe toward the middle or the end of this year. And as we all know, rate cuts are positive for asset prices. So I'm very positive on asset prices for the coming years, unless the fiscal deficit gets resolved, of course, which I don't bet on.
So we've got two bulls. Julian?
Morning, everyone. So, look, long term, I don't disagree about the fiscal thing. I think we're sliding to what is technically referred to as fiscal dominance, where central banks increasingly have to focus on keeping their boss solvent as opposed to controlling inflation and employment. But my focus is a little bit more short term. And so when I look at things short term, there's unquestionably, I think we have a bubble in certain sectors of the US equity market. You know, Nvidia, if you look at it, it walks like a duck, it quacks like a duck. It is a bloody duck, right? This thing is a bubble. Now, at what point do we hit, you know, does it have a final surge? That would be my guess. So in that sense, you know, I'm with Michael and I'm with Joseph on this idea that we've got somewhat positive upsides to go. Janet Yellen has done an amazing job at essentially offsetting everything the Fed has done to try and tighten liquidity. Her job is singular. It's to get her boss reelected. There is an institutional fear in the Fed too of the orange man, I think potentially rightly so, when it comes to the policies he could enact. So, you know, she's got the ability to draw down the TGA, 800 billion there that she can spend. And so, you know, even if you get a wobble, I suspect they deploy that. So into year end, I suspect, you know, you're buying dips basically in the equity market. Now, when it comes to the bond market, I'm a structural bear. I think that we are in a 30-year bear market in bonds. I think the median rate for 10-year treasuries left to their own would probably be about 8% by 2050. There is just a global shortfall in savings. We're moving into a period where, you know, supply aside, right, we're trying to shove an increasingly large amount of debt into a shrinking or flat market in terms of demand. And so I think the biggest risk into year end is once again another sell-off in the bond market. I see inflation coming back quite hard in the second half of the year, and really quite hard. But I agree that I think the Fed seems determined to try and start the cutting cycle, but I think they're setting us up for policy error. And I think what's really happening right now is we're beginning to get a cyclical upturn in growth. So if you start to look at some of the cheap assets, particularly in the commodity sector, you're starting to see those assets perform as if growth is re-accelerating, which it actually is. So as I said, I think for the central bank, certainly the Fed, to be cutting rates is clinically insane, but they're going to do it anyway. So it just has consequences, and you have to trade those consequences.
Good morning. I'm very much on the same page
I'm
as
almost
Julian
exactly in line
in that
from
respect.
with
I'm bearish
Julian.
fixed income.
Julian
I have
Brigden.
been for a long time. I think the central bank is certainly going to cut rates, almost certainly, and I do think it's an error. I think what they've done, the rate hikes have had a fairly small impact on the household sector and the corporate sector. The household sector in America typically have a 30-year mortgage, and the average mortgage rate is 3.7% or 3.8%, and they're not moving. They're not moving house, so they're locked in at this rate. And the policy changes that have been done by the Fed haven't really had the kind of impact that you might have expected. The Fed talks about long and variable lags with the from the time when they change policy to the time it has an impact on the economy. But the Fed got the first 425 basis points of rate hikes done before the start of last year. Well, the final two quarters of last year, growth averaged 4% over those final two quarters. Now, you know, by that stage of the game, by the second half of last year, those rate hikes should have had an impact, but so far we're just not seeing it. Same thing for the corporate sector. The corporate sector had a decade to term out its debt, which it did very successfully. Now, sure, there'll be some zombie companies that will go to the wall as a result of these rate hikes, but you know, that's people were complaining about keeping zombie companies alive.
They'll probably be
for the
walled
past
off, so my
decade.
scout won't see much.
It's
but
time we had a
I'm
bit
gonna
of a
send it
clear out,
nonetheless.
a bit of
Maybe see
let's
if they
say,
got
creative
multiple barracks at the
destruction.
front or something.
That process is taking place. We are seeing some of the weaker companies in distress. But by and large, the economy has done extremely well, regardless of what the Fed has done. And if you look at household wealth, it has just gone through the roof. So I agree with Julian. I think the Fed will cut, but I don't think they'll get far in this
not a
cutting
full wall.
cycle. And I do think it's a mistake, and I think inflation is going to rear its ugly head again.
Thank you. Julian, what are the consequences of a situation where
Gas, buddy. Come on. You need gas.
that the Fed had anticipated that there would be an economic slowdown and that 5.5% interest rates from zero would severely curtail spending, investment,
Minerals
and
now.
crash the equity market. That was the expectation. Now, Bitcoin's at all-time highs, as some in our audience might have noticed. stock market's at all-time highs. Things that are looking quite good. What are the consequences of that
Command
to the
center
economy?
got better.
So, I'm a big believer in this thesis that I call hyper-financialization. So it's a bizarre,
Landing sequence interrupted.
somewhat counterlogical sort of setup whereby you would think that the real economy should lead financial assets. The real economy should set growth, it should set inflation, set
Insufficient
bond
vesting
yields, it should
gas.
set profits, it should lead equity,
Not
should lead
enough
the
minerals.
bond market. But actually in the
Minerals
US,
now.
it's not how it works. In the US, the equity market pretty much sets the direction of the economy from two different things. Firstly, in terms of corporate behavior, and it's very simple. If stocks are rising, CEOs hire. If stocks are falling, CEOs fire. And the same goes for CapEx. And then you have a wealth effect, as Johnny was alluded to. And the numbers are truly mind-blowing, guys, right? In the last 4 years, household wealth has increased $47 trillion. Nominal GDP is 28, right? And as Johnny was alluded, you know, if I look at myself, I've got my mortgage locked in at 2.65%, mate.
There we go.
3.65%. I think that's probably one of the best recommendations I ever gave on Real Vision. I'm long stocks, I'm long assets. So what's the Fed done to me? Absolutely bugger all. And so the reality of the situation is that far from, as I said, from slowing, and it looks like we went a weak patch. If you look at claims data, calendar layoff data, they've all
You're gonna need a
reversed
tad bit
all the
more
weakness that was penciled in at the beginning of last year, and they're now on the cusp of potentially re-accelerating. And it's all about, in that sense, it's about asset prices driving financial conditions. And I find it amazing that Jay Powell came into
Gas,
office,
buddy.
and he said to us,
Your
look, the way that rates
insufficient
work,
vesting gas.
and this was an annoying thing that all the macro guys knew, is via financial conditions. So we all went and looked at financial conditions. And all of a sudden, financial conditions have eased inordinately,
Not enough
and he's
energy.
not bloody mentioning them
More
at all, right? So what are the consequences? I think you've got an incredibly robust economy. You've got a bunch of corporates who are ready to re-accelerate hiring, re-accelerate CapEx, and when you haven't dealt with underlying inflation and you're sitting with unemployment under 4%, that's an incredibly dangerous setup, right, in terms of inflation.
Well, in December, the Fed was worried about tighter financial conditions. They were saying financial conditions have tightened and the Fed were going to start easing soon. And since that point, financial conditions
Wouldn't
have
recommended
eased
it.
dramatically. Goldman Sachs had their financial conditions indexes calibrated to be
supply
the equivalent
depots
of
are required.
basis points. It's the financial conditions have eased by the equivalent of almost 100 basis
gonna need
points
a
of Fed
tad bit
cuts
more energy,
before the Fed
more
has even
shoebox.
started. And it does make a difference, as Julian said. Household wealth in just the fourth quarter climbed by almost 5 trillion, and households have less need to save from their discretionary income. The savings rate is low, but it's still positive. People are still accumulating wealth.
So why is the Fed doing one thing, saying another? I mean, that's the bizarre thing, isn't it? I mean, they can't be. I mean, there's so many PhDs at the Fed. There must be somebody who realises.
Well, I think look, I mean, I have a very good friend who worked at the
Gas,
Fed,
buddy.
was
Come
Portugal
on, you
Jones'
need
chief
gas.
policy guy. And Rob is in his early 70s, and he has this great expression. I've watched the Fed man and boy for 50 years. They're always most bullish at the top, and they've never caught a turn, right? And I truly believe that their forecasting is poor. I think that we know that Chris Wallace switched to looking at anecdotal evidence at the end of last year. It's one of the reasons why he tipped towards this more negative stance. We all know with anecdotes, you can find an anecdote that fits your view. And I do feel fundamentally, Michael, that there is this institutional desire, and I've been told by friends who talk directly to the Fed, that a recession is not an option this year. And as I said, it comes back, I think, to a fear of of another Trump administration and what that can potentially do. So I think you've got a Fed that is predisposed to look for the silver lining and to
Additional
try
supply depots are
desperately.
required.
Because none of the data, I mean, I just got a report from a bunch of my policy friends recently. They said, oh, well, you know, the data is got kind of better and it's a bit uncomfortable. But they trust that everything is going their way anyway. So they're still going to push ahead with that first rate cut in June.
Research
And you sit here and go,
I don't think
What
I
did
don't
you
think the
say?
Fed would really drive up unemployment
Command center
significantly in order to meet the 2% target. The Fed gets to 3%-ish. If getting down to 2% involves a significant cost to the economy, they're not going to
That'd
do
be a
it. They're
solid
just
no on this one,
they'll be
Captain.
happy with 3%. They'll never admit it. They'll say the 2% is the target, and talk about the final mile and all that nonsense. But in reality, they're just not going to run that final mile.
Are they that bad, Joseph? You were there.
Yeah, right, so I would say that, so we all look at the equity market going to the moon. We see what's happening in dog with hat coin and so forth. And so we know that financial conditions probably aren't very tight. But that's not how the Fed perceives it, strangely enough. You will have really important people from the Fed. For example, President of the New York Fed, John Williams, go on record and say he thinks financial conditions are the tightest they've been for over 20 years. That's how they see the world. And I think it's helpful to look at things from their perspective. And so the way they look at this is they look at something called real interest rates,
More
which is
shoebox
nominal minus
depot
expected
thingies
inflation.
needed.
So if you look at the world that way, you'll see that real interest rates
Not
are
enough
about
minerals.
2%.
We
Now, is
finished
2% real?
Minerals
Is
now.
that restrictive or
Get
not?
'em.
Well, then you have to look at it
Not
another
enough
Fed
minerals.
tool, and the Fed being mostly comprised of PhD economists who are, as Julian mentioned, not very good at forecasting. They'll say that, well, the neutral rate in the world, that's the benchmark to know whether or not monetary policy is tight or not, is 0.5%.
complete.
So if 2% being much higher than 0.5%,
Upgrade
obviously
complete.
we're being very tight,
Additional
right?
supply
And
depot
we're looking at
minerals now.
inflation, and it came down from, let's say, 7-8% to 3-4%.
Your upgrade
So
is done. More
it
shoebox
looks like it's
depot
working, and so
thingies needed.
even if the stock market
minerals,
goes to
you
the
can't
moon,
build on
even
that.
though these financial conditions continue to loosen, well, according to my model, according to this framework, I'm tightening financial conditions.
Let's-
And I
just
agree,
ask
this is
you-
nonsense, but that's the
Joseph,
game.
I agree.
Where does this neutral rate come from? This idea of it being 0.5%? It comes from these very complex models where they put in all these
Mineral
inputs,
field depleted.
their idea of
Commander.
what's going on, and out comes this magic number of 0.5%. And in reality, if you tweak the inputs to the model, you get a different number. So
Finished
why
burning.
not just put your finger in the air and say, well, I think that it's actually 1%.
I
or-
think they do a better job that way. And to your point, Johnny, the error bands of these models are enormous. You really can't set policy to them. That's ridiculous. And I think Julian makes a good point about the
Minerals now.
institutional fear
Get 'em.
of a Trump administration. So I used to work at the New York Fed, and you can actually look at public donation data, and you can see that
The minerals have
at the
up
New York
and
Fed,
gone.
about 90%, 95% of the people donate to Team Biden. So they don't like the orange hair. That's very well understood.
Like gold did, Bitcoin is establishing itself as a macro asset that potentially helps hedge against the government devaluation of your money. Finally, you can easily access Bitcoin in a low-cost ETF.
No
in
way
VanEck
we lose
Bitcoin
this.
Trust, ticker HODL. Search the ticker HODL in your brokerage app today. Visit vaneck.com/HODLFG to learn more. That's vaneck.com/HODLFG. Now the
Research
disclosures. Investing involves risk and you can lose money on an investment in the
Finished
VanEck
learning.
Bitcoin Trust, also known as the Trust or HODL. The value of Bitcoin and therefore the value of the Trust shares could climb back to zero. You could lose your entire principal investment. For a more complete discussion
Not
of the risk
enough
factors
minerals.
relative to the trust, carefully read the prospectus link below. Thanks, let's get back to the interview.
Your
So
command
the Federal
center
Reserve,
upgrade
the
is
American
complete.
central bank, where Joseph used to work, and Joseph printed the money. They have a dual mandate, so they do not care about crypto, and officially they don't care about they don't care about the stock market either. Their
We
mandate
finished
is
that add-on.
low unemployment
Nice.
and
That'd
stable
be a
inflation.
solid
Their
no
target
on
rate
this
is
one, Captain.
2%. So the issue we have now, inflation was super high, and it's gone down dramatically to 2%, but it may be stable. So the Federal Reserve has committed to cutting interest rates. What a lot of the folks are saying, Julian, is that it might not be appropriate to cut interest rates because the U.S. economy is hot. But they will, Joseph, do you think that they might, number one, because they have committed to, and the Fed really does follow on their
Landing
word,
sequence
typically, right?
interrupted.
And number two, they do have a institutional
Unacceptable
fear of the
build
orange man.
location.
Is that correct, Joseph?
I think they think from their perspective, because real interest rates are high relative to what they think that they are being restrictive, and they have reiterated that over and over
Our
again, even
allies
though
are being
I think
attacked.
no one here believes that.
Do you also think they have a strong commitment to their forward guidance? Believe that because they said they're probably going to cut 3 times this year, they need to go ahead and do that because otherwise the forward guidance loses credibility. long-term policy with it. This is critical. The teams won't be able
I mean, they could tweak it, Johnny, so we might get. I mean, we're close to points of whether they would keep the free
You're
option
max, buddy. No
cut
more stuff.
or drop it to 2. But they're going to cut. I think that's the point. And you and I would sit here and go, on what basis, on what rationale? 6% on P.
Oh, it's too easy.
Slowed at all. So however you parse that, right? I mean, the equity boys may say, you know, my wet dream is I wake up in the morning and inflation is at 0. But when, you know, that's great. If nominal GDP stays at 6, then real growth just accelerates to fill that gap. And when you've got sub 4% unemployment, you're in a real tough situation trying to grow an economy at 6% with 4% unemployment and not create inflation. So, but, you know, I think it's insane for them to do it, but they seem determined to push ahead. And our job here is only to come out and look at what the consequences are. And I think they're bearish for the bond market. They're broadly bullish for asset prices, although you may get some indigestion if the bond market wobbles too far and too fast, especially with a very overvalued US equity market where the money is starting to come out of the high-tech sector and move into these more cyclical plays, which are emblematic of an economy that's re-accelerating. So commodities, industrials, you know, things like the, you know, some of the European indexes. But I think it's just a massively good macro market.
And so tomorrow the Federal Reserve is going to have its meeting at 2 p.m. Eastern time. They're going to put out their summary of economic projections, and then 30 minutes later, you know, Fed Chair Jay Powell is going to be interviewed by the press. On the spectrum of the Jay Powell who said, you know, in I think 2022 at Jackson Hole, pain is coming, versus the Jay Powell of recent saying, actually, because real interest rates have declined, you know,
Really
we
haven't
may
seen
cut
any
interest
pain,
rates as
because
many
fiscal
as 3
spending
times
has been so damn high.
this year in 2024. Which Jay Powell, Joseph, do you think we're going to get tomorrow?
I'm still waiting for that pain to come. So I think that I think tomorrow, like Julian mentioned, it's a coin flip. So just for context, in December they guided towards 3 rate cuts this year. Between then and now, we've had inflation coming in a bit stronger than expected, and so there's some speculation as to whether or not the Fed maybe this time around will guide towards 2 cuts instead of 3 cuts this year. I tend to think that this meeting will be very much like the past, whereas they just guide towards 3 hikes and 3 cuts this year. They've always believed that the data would be bumpy, as they say, and you know it has been bumpy. But I also think that if you look at it from their perspective, the market has been pricing out a lot of cuts, and so a few months ago the market was pricing as many as 5-7 cuts this year, and now they're on 3 cuts on the same page as the Fed, and so there's really no need for the Fed to signal additional hawkishness because the market has in part done that job.
And the theme really of the Federal Reserve thinking that financial conditions are tight because the short-term interest rate is at 5.5%, which historically, you know, over the past 20 years is somewhat high, when actually credit spreads are very low, stock market at all-time highs. I mean, there are, you know, meme coins being printed on Solana that within 24 hours get a market cap of $1 billion. You know, pretty obvious that financial conditions are quite easy and loose. Michael, how do you explain this, specifically your work on liquidity? You know, how does central bank liquidity, how has it expanded even as the Federal Reserve has
I used to
raised
hate
interest
this
rates
map, but
and
they
has
reworked it to make
attempted
it kind
to
of
reduce its balance
playable.
sheet via quantitative tightening, and has accomplished that somewhat?
Let me try and answer it this way. I think we're in the thing to start with is to say that we're in a very different world here. We're in a world where capital spending is no longer driving economies. We're basically living in a world where financial markets are acting as refinancing mechanisms, not new financing mechanisms. In other words, there's so much debt out there, $350 trillion worldwide, with an average maturity of 5 years. It means you've got to roll the debt every year of about $70 trillion. And to do that, you need balance sheet. And think of a small-time example of a home mortgage. If you don't get the roll on your home mortgage, you're homeless. It doesn't matter about what the interest rate you pay is. You need to find someone who's going to lend to you. And that's the point with the financial system. With so much debt out there, you've got to get the roll. And you need liquidity and balance sheet capacity to do that. And that's what I think the central banks are doing. So I don't think interest rates matter out there, particularly. I mean, obviously to some they do. And there's a lot of poring over, you know, is it going to be 3 cuts, 2 cuts, 1 cut, whatever. But generally, the liquidity cycle bottomed in October of 2022, just after the British gilt crisis. And that was the wake-up call to policymakers. and it's likely to peak out in late 2025, early 26. And through this period, liquidity has gone up, the markets have gone up, and rate expectations, policy rate expectations from the Fed or whoever, have whipsawed either side of that trend. Sometimes they're going up, sometimes they're going down. It hasn't mattered the the market. What really matters is liquidity, and that's what the central banks are doing. And I would give you an anecdote that when I first started in the business in the mid-1980s, I remember I was sitting in Salomon Brothers in New York on the trading desk 10 days after the stock market crash, and I was talking to a trader, and he interrupted me and took a call, and he wrote down this big futures order, and he said, put the phone, and he said, that was the New York Fed buying. So point there being is that what's really critical to central bankers is financial stability and the integrity of the sovereign debt and capital markets.
They were buying, the Fed was buying bonds.
Futures. No, they're buying futures and stocks.
Really?
Yeah.
That is not official
And
policy.
they're not supposed to do that.
Yeah, wow, that is, didn't know that.
Whatever you have to do to keep your boss solvent.
Yeah. And so Michael, how will liquidity continue to increase from the Federal Reserve if they remain committed to quantitative tightenings? So they're reducing their balance sheet, and the reverse repo facility, basically the money that's coming out of this enormous facility to house excess liquidity, it's gone down from trillions to hundreds of billions, so still a lot of money. But ultimately, as that goes down to zero, where is the marginal liquidity going to come from?
Well, I think it's a challenge. And there's an old saying in Ireland that if you want to travel to Dublin, don't start from here. And that's the reality the Fed has got. I think what they need to do is to get bank reserves rising. And that's what I've been saying for a long, long time. The problem with the US banking system is that JPM is in great, great shape, but the regional banks are not. And if you look at when the time of the SVB crisis in March of last year, look at the cash holdings of the regional banks, small banks. They're exactly the same as they are now. So that hasn't changed. JPM has pulled in huge amounts of liquidity. And look at the share price of JPM. It's rocketing just to reflect that. But the regional banks have got a problem. So the Federal Reserve needs to get general bank reserves rising, and I hope that spills out. And that's exactly what Laurie Logan was saying in January about what the Federal Reserve needed to do. And I think that's an interesting call because she knows a lot about the SOMA accounts and how the
Q time's taking forever.
But broadly speaking, what you've had in the last few months is basically, or last year or so, is that the balance sheet has come down, but the liquidity creating elements of the balance sheet have gone up. So there's been a net liquidity increase by the Fed because of things from the TGA that Julian mentioned, the reverse repo account that you've mentioned. All these factors have come in. It's a lot more challenging in the next few months to get that unless they change policy and they try and find some way of getting liquidity in. Now, I think that one of the things they may be doing that is changing the rules, lo and behold, and trying to get the banks to own more debt. And just look at the latest US money supply figures as an example. I don't look at money supply that often, but it's important at times to watch. M3 is starting to accelerate in the US, but it's not because of lending to the private sector, it's because of increased funding for the state. In other words, they're funding the government deficit. Milton Friedman would be turning in his grave if he saw that. That's what's going on.
It's inflation.
Huh?
It's called inflation.
It's called monetary inflation, exactly. That's what they're doing. They're not telling us.
Now let's talk about currency. So like one fiat currency relative to another. Julian, what do you think about the U.S. dollar, which is the global reserve currency, rather than focusing on its long-term future, but like short-term, are you a dollar bull or a dollar bear, and why? Relative to say the euro, the yen, whatever.
I think we're at a really very important inflection point. The caveat being that we've been here before and we've backed off. It looks like the dollar showing signs of weakness, accelerative weakness, and you would expect as you move into a reflationary cycle, global reflationary cycle, that generally the dollar underperforms. And in fact, a dollar weakness on a relative basis is an integral part typically of that reflation. It's the denominator of a lot of asset prices, so as it falls, it rise in value. There's not many
StarCraft
currencies
nerds
which
need to
truly
wake
broken
up.
down in. Dollar Mex, it just took out a trend line from 2008.
We're at 5.5 minutes
on
for
a
a
closing
Q time.
basis. You can see obviously the weakness of the dollar versus say gold. Silvers, which is a super high beta, essentially replacement for the dollar, is starting to show signs of wanting to break out, and it's something that we've been playing. But against a lot of the other fiat currencies, you're just not seeing it yet, Jack, right? And so I think I'm a structural dollar bear. I but I want to see some of the confirmation in some of the other price action. Right? I think it's coming. I think a Fed that cuts that when it isn't legitimate to cut, where it isn't warranted to cut, and essentially keeps real rates too low against other central banks that seem to be taking a much more cautious and grown-up approach. I think is a recipe for dollar weakness, but I have to see it in the price action.
So you can envision a scenario where the Federal Reserve cuts interest rates before and in steeper fashion than the European Central Bank?
Well, I think the ECB can still cut, but I think it's much more warranted in Europe than it is actually in the US. I think it's a policy error in the US because we don't have the economic porridge, far from being Goldilocks just right, remains on balance too hot. And that's where you get a policy error. And I think, generally as well, I think that all the money in the world is sitting in the dollar. Right? It's in the US funding a vast current account deficit and a budget deficit, and it's all been sucked into this in this sort of reflexive, self-reinforcing, virtuous cycle. Very similar to we had going into the dot-com bubble, very similar to we had going into 2009. And if we get reflation, that's not usually hugely beneficial for the US. It's because you take your money out of very high PE tech stocks and you buy cheap commodities and mining companies and oil and so on and so forth. And so I think that cycle is beginning showing signs of picking up, Jack. But as I said, the proof is in the price action, and you can't jump the gun on this. So while PA, I'm very long, copper and gold and platinum, I really want to buy things like silver. I really want to short dollars. But outside, say, dollar MEX, I don't have that technical signal that says it's on, it's now, do
Minerals
it.
now.
Julian, so you say you like all these hard metals, basically things that are denominated in dollars.
Not enough minerals.
What would it take for you to say I'm bullish on Bitcoin?
So I've got some.
Okay.
Raul finally convinced me to do it, and I got some around 12,000. Of course, not enough. And I'm riding that
open
one
with
for
a
the
mine
moment in
drop.
the same way Joseph and Michael said. I agree. We get strong
Additional
asset
supply
prices,
depots
at
are
least
required.
probably through until the beginning of or the end of the third quarter. We'll see what happens in that kind of classic September-October kind of period where things
Minerals
get a little
now.
dicey. But I just personally, I view it as just a lot. I can't do what Raul does and just buy something and just hold it and not be concerned about the P&L swings. So I will trade this thing. So I think, at the point that I think that we hit vulnerability in terms of asset prices brought on by, once again, weakness in the bond market or reinsurgence of inflation, I will cut my position and look to get back in again at lower levels.
And do you kind of view it as like a triple levered NASDAQ position, so basically very levered stocks, or do you view it as gold? Because it is.
I don't see it as gold ultimately.
Yeah.
I really don't. I'm happy to debate this one, but I just think
SCVs,
Bitcoin is,
they're
or
under
crypto in
attack.
general, is too good at avoiding the rules, and so I don't see it as a long-term store of wealth. I really don't. I think governments will be forced to act to contain it or at least limit its geographical fungibility at some point, because we're going into this higher inflation, high debt world. Rules just change, guys. We're going to be looking at things like exchange controls, financial repression, all those sorts of things. And crypto is too good
Your command center
in that
upgrade
sense.
is complete.
But I said on Real Vision, it could be the world's best trade.
Michael, what are your views on?
Well, I think that Julian's raised a very important point, and that is that the authorities can change the rules. And you've only got to look at what happened with the Gold Act in the US in 1934 to actually show that. And for those of you that don't know, gold was banned in terms of private holding. I think I'm correct in saying that the fines in 1934 were, I think it was $50,000 and 7 years in jail.
Yeah.
And that focuses the mind,
Yes.
right? So they could do that. And what happened, if you don't know the story, it's a
Finish that
fascinating
panel.
story, but it was
Nice.
a way of actually devaluing the dollar. So the US Treasury called in all private gold deposits into the Treasury. You had to submit them at a price of $20 an ounce or thereabouts. And then basically they pulled them into the Treasury, and then they progressively revalued gold each day. And there's actually a true story that I think Roosevelt, his advisor, met every day over bacon and eggs. And they said, this is what the gold price is going to be today. And they progressively pushed it up to $34. And that's how it was done. And there was a huge capital gain, effectively, for the Federal Reserve during that period. So they could do a similar exercise,
Command
basically
Center
making
got
crypto
better.
illegal, or at least try. I mean, that's a risk. Aside from that, I'm hugely bullish. Because I think that this is the way forward, because you've got a monetary inflation. As I said right at the beginning of the panel, this is like 1919, if you like, in Germany. And I think what you've got is a huge fiscal deterioration going on, and you need some protection against that. And just to kind of put that in context, and you can think of this in sort of very simple math terms, but if you look at how much debt, or the debt increase percentage GDP for the US, and the US, I'm not kidding on the US, because actually the US is probably the cleanest shirt in the world. But if you go back to the year 2000, and you look at the size of the deficit, which was basically zero, interest rates were low, and the debt GDP ratio was about 38% or something like that, okay? What that meant was debt to GDP was growing at a rate of under 1% GDP every year. If you do the maths today, the answer is about 9%. If you redo the maths
help your
for
friend.
2040, it's 15%. So what you've got is that debt every year is growing at 15% of GDP just from compounding, and it's because you've got a structurally high fiscal deficit because of mandatory spending and aging demographics, and there's no way they can get off that unless they renege on these promises.
Well, let alone we're fighting two wars, a kinetic war or two kinetic wars, Cold War with China, and a climate change war. I mean, the amount of money that has to get spent, guys, and this is why you should expect regulation, right? This sort of laissez-faire world where you think you've had it off, right, and you can move your money all over the world. Those days
Add-on
are coming
complete.
to an end. You are going to have to think very, very carefully where you warehouse your cash, where you hold physically your crypto, right? Where you want it to be regulated, because it is going to be controlled.
But
A lot of
back
wars-
to what you said before, Michael, when the US did what they did with gold in 1934, that was effectively a currency debasement, and
Correct.
that was to help get out
Our
of
allies'
the
base is under
Great
attack.
Depression.
And it worked, right? It kind
Yeah,
of
and it worked. It worked. That was the thing. You know, you had a pickup in nominal GDP growth, and the same thing when Nixon took
Yeah.
the US off the gold standard. But obviously, a lot of the increase in
Finish
nominal
that add-on.
growth
Nice.
was through inflation
messed
rather
up
than
my
actual
hotkeys.
real growth. So we do have, you know, and I think that's the attraction of crypto. It is the hedge against currency debasement. And to me, I do think that that is the way the US is going, particularly with these soaring deficits. If you look at the debt to GDP, in fact, after the pandemic, when there was this enormous fiscal stimulus, debt to GDP I think it dropped from about 130% to 120%, because you measured debt
Worth.
to GDP in nominal terms, and the nominal GDP growth was so great.
the denominator went up.
Yeah.
Yeah.
Yep. And that's the thing. So that is how the US and all countries get out of this problem, is by getting a period of very, very high nominal GDP growth. It's how we in this country got out of the problem at the end of the Second World War.
So that might be in a lot of printing. We've got to leave it there, but everyone should check out all of the work starting out of this order: Super Macro, MI2, FedGuide.com, and Cross Border
Your command
Cap.
center
Lightning round at
upgrade
the
is
end.
complete.
S&P 500 targets are of course nonsense, but if I were to say where do you think the 10-year bond yield is, S&P 500, the stocks, like in terms of higher or lower, and Bitcoin. Johnny, I'll give you an exemption. If you don't want to, you don't have to say Bitcoin because I know you don't follow crypto. But starting from Johnny going over here,
So what at the end of
end of the year, at December 31st, 2024.
Okay, I'm going to say for the 10-year, I'm going to say somewhere between. Well, okay, let's be more precise. I'll say 470.
So higher. You could just say higher or lower.
Yeah, higher. Okay, higher. For the S&P, I'll also say higher. And probably for crypto, I would also say higher.
William?
So I'll say higher on bond yields, flat on the S&P, and slightly higher on crypto.
Joseph?
They're higher on equity markets, higher on crypto, and higher in bond yield.
Yeah, I'd say, I mean, my prediction's been 5.25% at least on the US 10-year. I think the S&P, I
that
think
add-on.
probably marginally
Nice.
higher than where we are. And Bitcoin's a very difficult one, but I would say, you know, within 5 years we can see
Research
200%.
complete.
This is all very consensus. I'm going to sell everything.
Yeah, yours.
Higher.
Yours.
That means something. Well, thank you all so much for joining, and thank you everyone for listening to this.
Thanks
Your
for
upgrade is
watching.
done.
Remember to check out vanek.com/HODLFG to learn more about the VanEck Bitcoin Trust, ticker HODL. A reminder that forward guidance episodes are available on all podcast apps and
Not
on
enough
Twitter,
minerals.
where I post them regularly at JackFarley96. Thanks again. Until next time.
Finish learning. Minerals, now! Get them! Not enough minerals. Minerals, now!
It's so easy to get your windshield replaced using SafeLight. Why don't you just get it fixed? All right, so what do we do now? I've scheduled an appointment at safelight.com. Tell them to meet us here at the beach.
Schedule free mobile service at safelight.com.
Safe Light Repair, Safe Light Replace.
Mineral field depleted. The minerals have
Policymakers, like you said, Mike, are vol controllers and want to stifle volatility. If you look at the volatility of all assets, gold, stocks, bonds, currencies, they're all just record lows, which is kind of nuts because, like, geopolitically, things are like a mess. It's pretty impressive, honestly. That's why I say markets are completely essential.
Hey everyone, this episode is brought to you by Aura, the all-in-one application that protects your safety online, powered by
Holy
AI.
shit, why is this so
Honestly,
loud?
it is worse to just be a
your friends. Hey, help your friends. Unacceptable building. The minerals have up and gone.
They have more shit than I thought.
Minerals now. Get them. You're getting more energy. Upgrade complete. Command center got better. Mineral field depleted. That'd be a solid no on this one. Insufficient Vespine gas. The minerals have up and gone. Not enough energy. Command center got better. We finished that add-on. Nice. The minerals have up and gone. Gas! Come on, we need gas. Mineral field depleted. You're gonna need a tad bit more energy.
Hello, my friends. Today is March 30th. Happy Easter weekend. This is Markets Weekly. So this week was a pretty quiet week in markets. We only had 4 trading sessions. But the S&P 500 did manage to make a new all-time high. From my perspective, though, it looks like the Nasdaq is running out of momentum. So it would not surprise me if we just kind of, consolidated here for a little bit and gave other people the chance to join the party. So today I want to talk about 3 things. First, I want to talk about the tremendous challenge facing Japanese policymakers because it looks like they're about to lose control of the Japanese yen. Secondly, I want to talk a little bit about this new research from the Federal Reserve Bank of San Francisco that sheds interesting light on the surge in early retirements during the pandemic. And lastly, I want to discuss hyperinflation during revolutionary France and what we could learn from it. Okay, starting with the yen. Now, just to level set a little bit, over the past few years, the Japanese yen has depreciated significantly against all major currencies. And the reason for the depreciation is obvious. Now, over the past few years, all the major central banks were raising rates aggressively to try to combat inflation, while Japan kept its interest rates negative and only recently hiked them to 0. So this huge interest rate differential drove a rapid depreciation of the Japanese yen. You can think of it as maybe you're a Japanese investor, you're seeing that you're getting 0 interest rates at home, you could get 5% in the US, so you sell yen, buy dollar assets. Or you could be a foreign speculator and funding your investments in yen. In any case, the Japanese USD JPY exchange rate right now is bumping up against 150, 151, which over the past few years has seemed to be a soft ceiling. Now, when you're in this situation as a policymaker, you have 3 options. First, you can do verbal intervention and try to talk the speculators down. Secondly, you can actually intervene, so actively sell foreign currency and buy your domestic currency. Or 3, you could adjust the stance of monetary policy and make it less attractive for speculators to sell your currency. Now, over the past week, we've seen Japan come out and do some serious verbal intervention. Their top currency official is going around saying that he thinks that the depreciation in the yen is not driven by fundamentals, but into speculation. He doesn't like it. He wants it to stop. Now, over the past few years, I think they were happy with the depreciation in the yen because it helped them get inflation up by increasing imported costs, and of course, it was also good for exporters. But it looks like depreciation has gone too far for them, and so they're trying to talk it down. Now, I'm not sure what fundamentals the policymaker is looking at, but if you look at, say, even real interest rate differentials, it does seem to justify a weaker yen. But in any case, it doesn't seem to be working because it looks like USD JPY is still hovering around that 150 soft ceiling. Now, the second thing a policymaker could do is to actually intervene. So they would have to go use their foreign reserves, sell them, and buy back their domestic currency. So Japan is a country with a major current account surplus, so they've accumulated tremendous amounts of foreign reserves. According to official filings, Japan has about $1.1 trillion in foreign reserves. Not all of it is going to be in dollars. As a major trading nation, I'm sure they have reserves in euro and RMB and other currencies as well. But I'm guessing, let's say, the bulk of it is. So maybe they have, say, $700 billion of that is in US dollars. So they definitely have the firepower to intervene if they want. But here's the problem with that. Now, they actually already intervened in late 2022 when USD JPY was pushing against 150. And their intervention led to the yen to strengthen significantly, but now we're back here at 150. So it looks like the dips in USD JPY just get shallower and shallower. The market, it doesn't seem to be as effective, and the market seems to be less scared. What they would do if they were to intervene is they would probably burn, say, tens of billions of dollars, and they would buy time. And maybe, in a few months, maybe the US get some soft data, market prices in more Fed cuts, and maybe the yen gets some reprieve. But then again, maybe that doesn't happen. So it's not super clear if that's the best course of action. The last thing a policymaker could do is they could adjust the stance of monetary policy. So in this case, that would be to hike interest rates, let's say to 50 basis points or even 100, and narrow the interest rate differential from their side. Now this would go some ways towards making it less attractive to short the yen. But again, even if you hike it by 50 basis points, I don't know, the interest rate differential is still quite wide. And also, Japan has been struggling with disinflation for some time. I'm not sure they want to have such an aggressive hiking cycle. So that seems very unlikely to me. Their best bet is, probably just to intervene and hope for the best. But if they don't do that, though, if the market breaks through this soft ceiling of, say, 150, 151, you could easily have momentum build and have some surges to the upside. So I think they are in a kind of a tricky position now, and it's going to have to get resolved really soon. So they're going to have to put up or shut up. Okay, the second thing I want to talk about is this brand new research from the Federal Reserve Bank of San Francisco that shed some interesting light on the surge in early retirements we saw during the pandemic.
Oh.
So to level set a little bit, during the pandemic, of course, everything shut down. Everyone stayed at home. Labor force participation dropped significantly across all age cohorts. But as the economy opened up again, a lot of people went back to work. Basically, everyone went back to work except those aged 55 and above. Labor force participation for those aged 55 and above dropped during the pandemic and just never recovered. Now, this led to basically a shortage of labor. Compared to pre-pandemic estimates, the labor force was smaller by 2 million people, and that shortage of labor was part of the reason behind the labor scarcity and surging wages. Now, this new data from the Federal Reserve Bank of San Francisco further breaks down that cohort of 55 plus and has an interesting finding. That is, the thing that stood out was that there was a series break in that there's a structural shift in behavior for those aged 55 and above without college degrees. So the unexpected surge in early retirements really just comes down to this cohort of people aged 55 and above without college degrees. And that's kind of a puzzle here. It could be of health concerns. It could be maybe they, just had enough savings, had enough wealth. It's not super clear, and I think that's more of a sociology question. But I also think that it relates to other issues. So if you are someone who's 55 and above without a college degree, you're probably in the trades. And maybe you are a truck driver, maybe you are a plumber, something like that. And that goes a long way in explaining all the anecdotal reports we've been hearing around that time, where it was very difficult to find someone to come and, basically do more manual labor. It seems like that was founded upon this huge surge in early retirements. Now, as a corollary to that, it seems like a part of the reason why things seem to have gotten better could be because we have such a huge surge in low-skilled immigrants over the past year. Now, the CBO estimates that immigration last year was about 3.3 million, most of it illegal. Now, we do have some interesting studies on the skills competition of these people, and as we hear, they're not really sending their best. They're not college grads. It seems like more like middle school in Spanish. So, but these guys are probably able to do a lot of the labor-intensive jobs that we seem to need
Queue
to be done.
times are taking
and so
too
that
long.
Might go a long ways in explaining, I guess, the disinflationary trend we've seen in wages, which continue to be high, but are no longer accelerating and seem to be gradually decelerating. One other thing that I'll note is that, so if you have a surge in the supply of labor to try to tamp down on labor inflation, that's great when you have a lot of demand, but ultimately one day when demand falters and you continue to increase the supply of labor, and Sid Predu on Twitter made this good point, then you'll just have higher unemployment rates, which of course would argue from the Fed's perspective for easier monetary policy. So there's a lot of things happening in demographics right now that might be making these models that people usually rely on to be less reliable. Okay, the last thing I want to talk about is hyperinflation in revolutionary France. Now, this topic came to me by looking at a post by Cuppy that featured writings by Eric. Now, Eric, I had heard him recently on the Market Huddle podcast. He had managed African portfolio for a number of years, and he was discussing his experience with hyperinflation in Zimbabwe. But he also then posted this article about hyperinflation in the time of revolutionary France. So let's say 1780s, 1790s. I thought this was fascinating, so I went and dug a little bit deeper, looking at some research by Professor Andrew White of Cornell University written in 1912, and also some recent podcasts on the subject on macro musings, where you had two scholars looking at this from a monetary policy perspective. I thought it was so interesting that I just had to talk about it. So the hyperinflation in revolutionary France was ultimately a fiscal problem. At that time, France was highly indebted, so much indebted that about 15% of government revenues went to pay interest. So obviously that was unsustainable. So what did the policymakers decide to do? Well, they decided to create a new currency called the assignat, which they would use to pay off their debts. Now, of course, you know, they're not just going to create money out of thin air, so they wanted to make people have confidence in their new currency and decided to back it by real estate. So back then, you had different power centers in France. You had the aristocracy, you had the crown, you had the clergy, and the clergy was just not as powerful, and so everyone decided to confiscate their lands, and they were the largest landholders in France, just confiscate their lands and issue assignats against them. The way this would work is that they would pay off their debts with this newly issued currency, and then they could sell the clergy's land, but only accept payments in either gold or assignats. So this link between, say, real estate and gold and assignats was able to give confidence in the value of this newly printed currency. Now, first, they printed $400 million worth of it. And then, a few months later, the government ran into trouble, remembered what a great idea it was to print assignats, and they printed 800 million. And later on, they printed more. But they were realizing that this was getting out of hand, and they would promise everyone, no, this is the last time we'll do this. We won't do this anymore. But they would promise that, and a few months later, they would print more again.
Of course.
When
Gotta
all is said and
monetize the
done,
debt.
by 1797, they would have printed $45 billion worth of assignats. And as you can see, the price of assignats against gold basically crumpled, such that by the end of 1797, they were worth nothing and ultimately canceled. Now, I thought, okay, well, first of all, that's what happened. But let's talk a little bit about the economic and socio-political implications of this. So, by and large, the first issuance of 400 million was very positive. Everyone was happy. All this money went through the system. People felt richer. People were buying. Economic growth was good. Everyone felt richer. But that seemed to be temporary, and soon after, that sudden surge would fade. And subsequent printings of assignats didn't seem to have the same impact. In fact, later on, the more they printed, you didn't actually get that surge in economic growth anymore. All you got was inflation. And that had some interesting qualities to it. Now, when prices began to rise, a lot of the businesses and so forth, they felt unsure about what was going on in the economy. So they began to have less investment. They began to be more cautious, and that also meant that there was less demand for labor. And so ultimately what you ended up was some kind of economic stagnation with rising prices. And the people at the time, they were complaining that everything was expensive, they couldn't buy anything, there wasn't enough money, and so they would complain to the government, who in turn would respond by just printing more money, which never seemed to solve the problem. Now, at that time, I think it's worth noting that, all the talking heads, all the luminaries, all the newspapers would go around telling people that, actually inflation is a good thing. It's good for business. Or when people were unhappy about inflation, they would tell them that, this is because you have all these people from England who are counterfeiting the currency, those bad foreigners, which actually did actually happen. But they would also point to things like, these greedy rich people, bad government, and so forth. But they would never actually talk about the root cause, which was they were just issuing too much currency. And as times became tough, the government would roll out all sorts of measures to try to contain this. They would go towards traditional measures, say price controls, which is, of course, what every government does in response to inflation, that would try to control, let's say basic necessities cannot exceed this price. If you are a merchant, you can only make this much profit. Or if you are shipping stuff, you can only have...
I searched for a game of CS and a game of StarCraft, and we found a game of CS first.
Paper. I will stand by the hostage.
I'm gonna jerk off.
Hey.
Let's go.
So it looks like we're playing some CSGO. Or CS2. Nice.
I would have got him in the cut right there. Let's go, my brothers.
Fuck off. Woo. That UMP. UMP is good. Has a pretty easy pattern. Nice. That was close.
Guys, I tell you, we kill them all.
Fuck off. Don't tell me my fucking shit didn't even hit. Okay, I got this.
Terrorists win. We cannot be killed. Come on, let's go.
Oh, hell yeah.
Smoke. Flashbang. Smoke. Throwing fire. Let's throw the grenade. Let's throw the flashbang. Let's throw the grenade. I'm throwing fire. Throwing fire. Throwing smoke. Terrorists win. You will all die. We must work together. Smoke. Let's throw the flashbang. Smoke. Grenade out. Throwing the flashbang. Throwing fire. Grenade. Throwing smoke. Smoke.
Nerd.
Flashbang. Smoke. Terrorists win. You will cry like babies before you die.
I killed them all. God damn.
This is our fight. Smoke. Molotov. Throwing smoke. Smoke. Flashbang. Grenade. Let's throw the flashbang. Throwing fire. Throw the flashbang. Let's throw the grenade.
So much stability.
Good hustle, everyone. I'll fucking kiss you, dude. I'll leave my phone in your mouth and everything, spit on you.
No more talking. Now we fight.
Okay.
Let's throw the flashbang. Molotov. Throwing smoke. Grenade out.
Should have waited on that. Ha! Lucky ass nade.
I'm throwing a flashback.
I'm one with the plan.
Yes.
In paper, in paper. Ooh. Must have hit him through glass.
Oh, there's like 3. Oh, he fucked me up. It's up to you, Billy. Shit, man down.
Two coming long.
Counter-terrorists win.
I didn't think they both had.
Fucking off.
I didn't think they both had ops.
Push it. Everyone push garage. Full send it. I'll smoke main. We full send it garage.
Together we can do this. Smoke! God! You just blame it all on Houston. Blame it all on
there's something going on, man.
Terrorists win.
Fredo in the clip. This is scary.
Let's go. Throw in smoke. Throw in flashback.
Well, okay then. Figured I was alright because I was smoking.
My brother attacked. My brother.
Terrorists win. Run, little girl, run.
He fucking broke his ankles.
For Queen and Country, man.
And one of their top frags has 200 ping. What would you do if I like walked up to you and I caressed your cheek? I put my thumb in your mouth and I made eye contact with you and I kissed you on your forehead and called you a good girl. What? You call me a nigger?
Come on, jump, jump.
You turd. I'm recording you. No, that's actually what I heard. Fuck that nigga. Oh, actually crouched. I'm actually crouched. I'm not. Oh, I'm actually crouched.
These kids are comedy.
Escorting the hostages.
Oh!
That's on you. That's on you, Billy. That is on you. That is on you, Billy. I
I'm
ain't
not
carry a
saved.
man out on my back.
Move.
This is all your fucking fault.
Bro, I'll fucking kiss you.
Then do it! Don't keep us waiting.
Us?
In case I need more ammo.
He's got a shotgun.
I got you, Bobby. Watch this.
I need backup.
Call me fucking hitman.
Behind the chair.
Dude!
Swag on.
The one in conference room.
Do it. Oh my god.
Counter-terrorists win. Easy peasy lemon squeezy.
Dude, turn it on, man. Do it.
When they changed the models for the hostage, why'd that look like Johnny Depp? Why it look like we're saving like homeless people?
Move it.
That's a good question.
Does it look like I'm a Democrat? Oh my god. He's behind the hostage line. Grenade out. Oh, both are long. Last one is behind the hostage.
I am en route with a hostage.
Don't kill him. I think this is the hostage.
Yeah, fucking get him, yeah. Yeah. Yeah.
Counter-terrorist wing. Pass out them. Nice work.
Yeah. So when you coming over to stick your thumb in my mouth?
I shit just set a date.
Bro, let's do April 1st.
I get it.
Those kids were comedy.
This much, charge this much per mile, and so forth. And these price controls really didn't seem to make things better. In fact, because the price control levels were set so far below market, many merchants simply couldn't make a profit and just
I'll be right back. I
stop
gotta
doing
take a
business.
piss.
Now, through this period, what I found was most interesting was that basically the price of everything from real estate to basic necessities and stocks all crashed up. Everything except the price of labor. Because as business stagnated, there was just less demand for labor, basic supply and demand, that kept wages low, such that wages basically were unchanged during the period, even as the price of everything soared, and a lot of the working class ended up having to live on government rations. So at the end of the day, at the end of the period, everyone suffered. The laborers suffered, the merchant class suffered, and even the rich suffered as well. The only people who really did well during this period were the speculators. Now, the speculators, those who were a bit more savvy, understood what was happening, and they began to buy all sorts of real assets, stocks, or real estate, and so forth, and they made out like bandits. And in this time period, since the only people who did well were the speculators, everyone took to speculating because that was how you would make your fortune. People stopped believing in working hard, stopped believing in thrift. They just went out and speculated because that was how you could make it. Ultimately, of course, this all became unsustainable, crashed down, and ultimately was fixed when people lost confidence in the government and Napoleon took over. Now, I say this not because I think hyperinflation or anything like that is going to happen here, but I think it's interesting to note that when you have significant, let's see, mismanaged fiscal policy, at the end of the day, you will get inflation. You will get inflation in asset prices, and at the end of the day.
Did you see my ace, Nolly? I got an ace one of the rounds. I didn't even really mean to. Gummy peach rings are one of the best things on earth. Scientific fact. I will have to go back and clip it. I haven't clipped anything since I started streaming again. I need to get better on that. What are you up to? What are you getting done? Steve reacted to my questioning of playing CS later, so it sounds like he may be down. The streamer Steve, for anyone who's curious. I need to get better about that. Like I'm fairly flexible. Like I've never not been able to like touch my toes and shit. but I could definitely stand to stretch more often.
Hello.
Gluten frog. That's what the Germans say. Your pre-CS stretching? That's always good. Before a CS sesh. Damn! Got one. I got me one.
Come on, let's go.
One more.
Grenade.
Nice.
I'm throwing a grenade.
Whoa! Got him. I think that guy would have had an ace if he got that.
Nice.
I need to switch my hotkeys so my main gun is on 1 instead of 2. Well, my pistol.
People leaving. Save it.
How many times do I need to hit him? I hit him twice with a Deeg. Is it 10 times now? Maybe it's whole clip with a Deeg these days. Ooh, that startled me a little.
It's gonna go. Nicely done. Lovely.
We are winning.
Yay.
Can you drop an AK, please?
Let's go.
I'm from the ground here.
Smoke.
So late.
Because.
Two coming up middle, coming towards people for one.
Smoke. I'm throwing a grenade.
I'm usually not very good with the M4, the regular M4.
Throwing fire. Throwing a flashbang.
I heard the headshot sound once.
One more.
This is the worst position that anyone could be in. You can tell Dino Man is bad. Because, like, the position he's watching doesn't actually watch anything.
Let's kill him off the exit.
Counter-terrorists win.
Like, being in that bush, you can't really see him come in. You can't see him much in elbow. You can't watch your homies back. It's just overall trash.
Move it, move it. Smoke. I'm throwing fire. Throwing smoke.
You're like, don't be. Hold safe. Got this. 2v3, got this. Nice! Lovely.
Ah, I wanted to get a gun. Should I honor Steve and get an XM? Gosh, gosh, gosh.
Smoke. I'm throwing a flashbang. Throwing smoke.
Oh, he had a swag.
Grenade out.
I hit somebody.
Swag. Slow. Wait. Got this. Let's go, last guy. We paper now. Let's go, swag! Holy shit!
Hell yeah.
Make it an M4 blue. Thank you.
I should have stuck with the XM. I was working.
Guys, I tell you, we kill them all. Smoke! Throwing fire.
I can't. Neither is so bad.
Throwing smoke. Grenade out. Throwing fire. Grenade.
Keeper, he's taking the hostage. Nice try.
Oh, I didn't know I was the last one. I thought I had a homie with me.
You should drop orange, purple. On your right. On your right, right there.
This is what we have been working for. Smoke.
I took out their top frag. I'm okay with that.
I'm throwing a flashbang.
Nice. Surprised he didn't trade that Galil for that M4.
Let's go, boys. Push with me CT like that again, please. Put a smoke off, middle.
Now is the time.
Wait for the smoke, wait for the smoke, wait.
Smoke!
Turn out. More close in the smoke, Good job. The game is low, 10 HP.
I'm throwing a grenade.
Oh my god, last guy live CT. CT with op, don't peek. On CT, bro, on your right. There's an op, just don't peek.
Throwing fire.
Molly again. You have another molly. Pushing long. Coming towards your orange. It's orange.
Terrorists win. We will dance on your graves.
Does anybody want this?
we draw? No way! I just got ran over by a thing. No way! Oh, it's cool.
Too long, last two.
Terrorists win. Yeah.
Shit. Nice shot.
5x3 area. I like how he specified the dimensions.
Dead. Nice shot. Two outside people, purple.
The XM is working.
Nice. Towards CT. Nice guy. Pushing. Push paper. Outside paper. Nice.
Nice. Good half.
We are out of here.
Kind of glad I have mature language filter on. I don't need to know what that guy said.
Nice.
Incendiary.
Stairs.
Decoys out.
Is that why you like that pistol, Nolly? I didn't realize the P2000, the one you usually use, has 13 shots per clip. Oh! Oh! With the last bullet in the clip too.
What the fuck just happened, bro? Okay.
That was great. No. I wish I would have known if I hit him at all.
Climbed up, I think. Push up. Oh no.
I don't know how I didn't hit him enough to get an assist. That was nuts.
Holy
An
shit.
inch away with a shotgun? Alright, I was maybe 10 feet away. Not an inch. But nonetheless, I was close. I wish these guys would push together. It's 2v1. Push together, get him to reload. Have the second guy push him when he reloads. Nice. That was a good shot. Like he pulled against the pattern well. Alright, so orange and yellow have kits. If I really need to, I can run over there where if they die.
Throwing fire.
We have to check close left green. Here.
Laying down smoke. Deploying decoy. Throwing flashbang. Flashbang. Grenade out. Counter-terrorist.
Hell yeah. Are you planning on getting on, Nolly? If you're still lurking around? Or what?
Moving, son.
Let's cut the shit. Are you gonna squat up or not?
Incendiary. Grenade. Throwing smoke. Grenade out. Throwing flashbang. Fire in the hole. Decoy.
Fuck. Wish that guy would have pushed right behind me. Probably could have got the kill.
Check left side green, check left side, close left.
I'm bringing the hostages.
Good try.
Come on, chop, chop. Roger that. Throwing fire. Throwing a grenade. Laying down smoke. Deploying decoy.
Fuck! Needed like one more shot probably to kill him.
Deploying flashbang. Incendiary out.
Why is this guy
Oh
giggling?
no, you suck. Just go to get the hostage back. You got this.
I don't get why this guy's giggling so much. I must have missed something.
I'm so mad. I can just feel. He got kicked out.
Go.
He got kicked out too. This game.
Grenade out.
Oh my god.
Incendiary. Throwing fire. Counter-terrorists win. Nice. I guess we got that mess sorted out.
The fire starter. Big promotion. I'll show you that ace quick, Nolly. It wasn't super impressive. I was sitting side hall long, and then I killed 3 trying to come in long, and then peeked out, killed another, and then had a quick little bout with the last guy. I didn't even know it was an ace until I read the, like, you know, it pops up on the screen. It was like swag mode MVP for ace, and I was like, hell yeah. Alright, how do I do this again? It's like F, one of the F keys brings up Shift F2, Shift F1, Control Shift F2, Control Shift F1. Fuck, I gotta Google it again. Forgot how to actually do this. How to bring up. Tilde. Shift plus F2 is what it's claiming. Oh, there it is. It was one of the rounds when we were on T side. Wait. Me. How many kills do I have right now? 1. So, not there yet. How the fuck do I find me? How do I find me? Why can they not make this simple? Is this me? Yeah, okay, this is me. It's one of the rounds... I think it's a round where I have a shotgun. Maybe it's this round? Okay, there's 1, there's 2. Yeah, this guy gets some burn damage. Yep, it is this round. So the third guy was the Molly guy. And then there's 4, and then I reload and get this guy for 5. Hell yeah. So now that we know it's this round, I'll go back to here and play it normal. So 1, 2. This guy gets burn damage. He misses me as I'm trying to reload. Literally dies just from the molly. And then this guy is trying to pick up a different gun. Easy kill. That's why I said it wasn't that impressive. I didn't even realize it was an ace because it felt so easy. And there's the 5th one. Hell yeah. Alright, how do I exit this? Exit to menu. Put it on the TikTok so all the kids can revel in my glory. As an epic gamer. Top gamer on the internet.
Let's roll.
Jesus. At the beginning of 23, Coinbase was down to 31 bucks, 31 and a half bucks, and now it's almost at 300. That's wild. I figured it'd be going down because a lot of people used to trade those Coinbase and a few others as kind of proxies to Bitcoin exposure. And now that you can buy an ETF for Bitcoin, I figured it'd drop down a bit.
Let's go, fellas.
But it seems my figuring was wrong. I think they have. They've definitely had some issues here and there. But I can't remember the specifics of it. Oh, yeah, yeah. I wonder specifically what it was for.
Hostages coming out.
That was a lucky shot. I didn't even think I was on him. It didn't look like I was on him at all. I thought I shot like into the door frame.
Come on, chug, chug. Throwing a grenade. Incendiary. Laying down smoke.
perk 10? The fuck is a perk 10? Perk 30 is where it's at. That's what the cool kids talk about. Is that kid cheating?
Incendiary out.
Woo! Those guys saved my life. They saved me. That guy better not be cheating.
They're gonna wish they were never born. Grenade out. Grenade out. Throwing smoke. Grenade out. Fire. Decoys out. Guarding the hostages. Counter-terrorists win. Right on.
Old Gary Gensler, chairman of the SEC.
Move it, son. Throwing a grenade. Counter-terrorists win. There you go.
Oinky boinky 4th 20. 4T20 actually.
Let's move out.
Yeah, that's why I feel like Steve loves this map. Should love this map because he's a shotgun man. This is his favorite gun. He'll get this gun on fucking maps that are long range.
Incendiary. Flashbang. Throwing a grenade. Smoke. Grenade out. Laying down smoke. Incendiary out.
Damn, he out shotgunned me. I got hella money though. You can do it. I believe in you. Peek him. Might as well push. He's got enough money to rebuy. Ha! Pushes all slow and then just gloosh. Got him.
Throwing fire. Laying down smoke.
I should have known. I knew that guy had an op. Of course, he's watching the most common place, most common angle there is.
Incendiary out. Throwing flashbang.
Yikes. Going back to the shotgun.
Let's have it, lads. Smoke. Incendiary. Throwing a grenade. Throwing fire. I'm bringing the hostages out. Counter-terrorists win. All right, all right.
Almost should have just not killed him and let my guy return it. You get way more money. You get like 3K for returning it. Like the whole team.
Let's go.
Ooh, he ate that one.
Throwing smoke.
Damn, Andy got shotty through the smoke. What a nerd. a nerd.
Grenade out. Decoy. Throwing fire. I am en route with a hostage. Throwing flashbang. Counter-terrorists win. You're right on. You're right on.
But yeah, this is definitely a shotgun map. Shotgun supremacy.
Throwing a grenade. Incendiary out. Laying down smoke. I'm moving with a hostage. Deploying decoy. Counter-terrorists win. We're really laying into them.
I think I accidentally set this to easy mode. But I guess I am still in silver, so. Because the last couple games been pretty easy.
Go, go, go. Grenade out. Throwing a grenade. Throwing fire. Smoke. Deploying flashbang. Grenade. Incendiary. Smoke. Throwing fire.
Oh fuck! Fuck! Through the wall! Fuck me. Nice. LOL. They almost always double smoke this, so I'll wait for the next smoke too.
Grenade out.
Too slow.
Let's go.
Hands are a little chilly. Gotta put it in the armpit. Oh, that guy just went ham. Apparently I hit that guy with my...
Deploying flashbang. Throwing fire. Laying down smoke. Throwing fire. Throwing fire. Flashbang. Hostage has been rescued.
Yay.
Terrorists win. Let us go.
Now for the easy side. Generally.
Let's go.
South Park, an homage.
Terrorists win. I fear no man.
Throwing smoke.
Throwing smoke.
You gonna be ready after this one, Nolly? Or what?
I'm throwing a grenade. Grenade.
Elbow.
Throw to the guy. Terrorists win. We will dance on your graves.
Let's move. Let's go. Throwing a Molotov.
That was a pretty good round. Yeah.
Grenade.
Fuck! I thought that would clear him. Nice.
We are the best.
I'm not sure. I'll probably go back to the gym at like 5 p.m. ish, maybe 5:30. What time is it now? 1:30. Oh, there's already only one left. Well, that was a round that happened.
Are you all as excited as I am to see how this pans out? Because I am very. Laying down some fire!
I must be really good at the video game. Are you planning on being on later tonight? Because if so, maybe I'll get off for now, knock out some laundry and shit like that, and then go to the gym and then come back and get on. I'm gonna go take a piss. Cool Doge. P. Diddler.
I need Master Chief. We all do.
Hand off your taxes to a local
P.
expert
Diddler.
who's just right for your situation. They'll do it all for you, 100% accurate, with TurboTax Live full service.
P. Diddy news. First time anybody said that in a long time, I bet.
I like when you like this, Daddy. Daddy, I like when you scrambling and scraping for shit.
Sean Combs, aka Puff Daddy, aka P. Diddy, is a talented man who is well established in the rap community.
Don't sit on the bed at night. No homo. No, just don't get close to the bed. Don't get close. But it's just like, yo, we want to thank you for hosting the thing, man. It's been a pleasure. You didn't have to do it, and you did it.
No, I definitely didn't have to do it. I definitely didn't have to. First and foremost, I'm not getting in the bed.
A community I am very familiar with. Due to P. Diddy's rap game, he established himself successfully on both coasts, even during the East and West Coast rivalries.
I'm the executive producer that a comment was made about a little bit earlier. But check this out. Contrary to what other people may feel, I would like to say that I'm very proud of Dr. Dre, of Death Row, and Suge Knight for their accomplishments. And all this East and West that needs to stop.
He has had much success in the world with songs such as Victory and I'll Be Missing You. Not to mention being very successful with his boy Notorious B.I.G. right alongside him.
The Tupac article had me pissed off, you know what I'm saying? Because first of all, he dissed my man, said my man turned his back on him, and I know for a fact that didn't happen, you know what I'm saying?
However, it seems P. Diddy's legacy has been a bit tainted recently because of some new information that's come out about how he's not that good of a guy. And he's actually like sort of the Jeffrey Epstein of rap, and that's pretty accurate, it seems like, at least.
Good morning. Quiet right now, but it was a chaotic scene with federal agents rushing into the home here behind me. There were two separate raids, one here in this upscale neighborhood, the other in Miami, both connected to a federal trafficking investigation.
How ironic that someone with the surname Combs is a groomer. Pew, pew, pew. The thing so you've definitely heard of P. Diddy.
What?
Well, he's getting sued by a fella named Little Rod, aka Rodney Jones. I'm assuming these are real service medals. Justin Dior Combs, P. Diddy's son, A. Diddy, J. Diddy, D. Diddy, I don't know what his name is. Ethiopia, the former CEO of Motown Records is also being sued. I'm just gonna be honest, she looks like she might be scheming right now. That is not a
She's
facial
scheming.
expression that people who are not schemers make. This guy, Lucien Charles Grange, also a massive schemer looking fella. Christina Coram, chief of staff at Combs Enterprises. Chief of staff, I thought that was a political thing, like an actual governmental position. I didn't realize that there was a chief of staff at Combs Enterprise. There are also other individuals named in the lawsuit that are just listed as John and Jane Does. Then there's all the record companies and corporations also named as defendants in the lawsuit. It's good to see UMG named. I like that. It's pretty cool. They pull some BS on us content creators, so, you know. So what is this lawsuit about? Well, the lawsuit alleges that Diddy was attempting to groom Little Rod into engaging in gay sex. That's right, gay sex. That's right, gay sex. The story is as follows. Diddy knew
Say
that
it once
Jones
more,
looked up
yeah.
to Stevie J, music producer, DJ, television personality fellow. He's won a Grammy for his work, and he's produced for artists like Mariah Carey, the Notorious B.I.G., and Jay-Z as well. So Diddy shared a video that allegedly showed Stevie J penetrating another fellow, all right? And Diddy said, this is normal practice in the music industry. Even Stevie J is doing it. You know, an appeal to an idol, I guess. What the hell? Shoo, bud, that takes that whole fucking, if your friends jumped off a bridge, would you go with them thing to a whole nother level, man. If your friends engaged in gay sex, would you do it with them? If they're in the music industry and they've won a Grammy, of course. Now, the photo that's in the lawsuit is not Stevie J. It's an older video of someone involved in Korn who confirmed on Twitter that it was in fact him and not Stevie J, which muddies the water of the lawsuit. So it's like, all right, what exactly is going on here? That's me, SMH. What do you mean it's you? Were you at Diddy's party? No, I'm a Korn man. What the fuck? Diddy also informed Mr. Jones that he had engaged in sexual acts with 2 redacted rappers as well as Stevie J. And internet sleuths, by the way, were very quick to speculate as to who that could be, the 2 redacted names, and they proposed that it's Usher and Meek Mill. And they proposed this based on annotations at the bottom of the page, annotation 5 and 6. He's a Philadelphia rapper who dated Nicki Minaj. He performed at a Super Bowl and had a successful pregnancy. Man, that just like exposes him completely. It's not redacted at all, bro. That's quite literally just like, there's only one person. What do you do? That's not gonna keep him sick. You can't put that. Just redact the names and they can give you 20 questions. Wow, he's a Wapple, and also he dated Nicki Minaj, and he's from Philadelphia. Philadelphia rapper who dated Nicki Minaj? Oh, crap. The lawsuit, as you can imagine, created a few miniature controversies in and of itself, but, you know, Meek Mill being named in this shit, he went on a day-long Twitter rant about being tied to the lawsuit, and Meek threatened DJ Academics because he was showing the lawsuit on stream. He specifically threatened him at the part where Academics reads the section above and called out Meek by name because he could, you know, put 2 and 2 there.
Yo, Meek, we were playing around with that Michael Rubin shit, but if you don't, you've been tweeting about you've been tweeting about everything on planet Earth. If you don't get a Twitter rant saying you about to get Lil Rod killed, you about to shoot up his block, blow his mama's house up, this is saying that you and Diddy were fornicating. What the Meek?
And then, instead of denying it, he calls Academics an alcoholic who's controlled by Yakub, which is pretty funny. He never even saw the lawsuit, apparently, before going on his rants. He thought it was AI-generated, possibly. Academics, didn't I tell you stop playing game with my name? IDK what I'ma do when I actually see you. It's gonna have to be a combination to it, though. Academics, an alcoholic fully powered by the white man. Do you think posting that on every website? They'd be so mad they can't stop its few groups. Get me his addy, I'ma shoot a full production music video in front of his house. Lol, seriously, get me that one in NJ. Was you trafficking women? TF wrong with you, Brody? Let's find the real lawsuit to make sure it's computer generated. It's obvious I'm going indecent. Y'all gonna see a lot of bad press about me. I'm going against the system. They see it's wide open. We have a whole new system. This computer generated shit really deep faking y'all to try and destroy all the top place winners. Most people not smart enough to outbeat the A computer, they sheep. I can't be destroyed though. I'm a computer too outside.
What?
I can't read! Is this me? Or what is this? I love people just blaming shit on AI now, by the way. That's just like the most convenient excuse ever. If I am ever accused of anything horrendous, hopefully like murder or something like that, I'm just gonna be like, that's AI for sure.
You what?
Never mind, guys. Never mind. I do not own any trench coats like that. Okay, what the I only own dusters. When I got a girl around me, I'm effing her 2 times a day. Ask some of you favorites. P don't control me, but it's like a high. One love to the gay people, but that juicy P do it for me. I done ran red lights to get that feeling. Y'all weird on here like devils. Man, if there was ever convincing evidence that someone's not gay, I'd say it's that tweet right there, man. That's true. Also, who cares if you're gay or not? Who cares about all this? Jamari, one of my favorite commentary channels, also talked about this whole Meek Mill thing and shared some suspicious clips with Meek and Diddy together.
But either way, the internet started ripping into Meek Mill over these rumors, pulling up old tweets like this where he says, "This D good as hell." This picture was also circulating online saying that their matching outfits were couple goals.
Man, interesting. Very weird things, very suspicious. He also said that losing a cellmate is like losing a chick, which is awesome.
Nah, dude, you got Sally for 3 months.
That nigga cried when the Sally left.
Pack it up, go to new jail. You gonna feel like you just lost a chick.
How many times you felt like that? No.
You ain't never lose your celly and feel like you lost a chick?
No. I lost some cellies that was some good, you know, they went home, motherfuckers. And you'd be like, damn, how many times you cried? I ain't never cried, man.
Very, there's a lot of implication in that. There's a lot of data implicit in that statement. Losing a cellmate is like losing a chick. Is this a co-ed prison? No, probably not. Probably not, maybe. What do we think? What are we thinking, guys? What do we think? Also, Daddy.
Now, this video of Meek Mill hanging out in P. Diddy's pool while he talks to him has to be the hardest one to defend.
Hey, what's up, King Son? Man, you doing it, man. You deserve it, Daddy. You putting in that work. Proud of you. I love you. Yeah.
You doing it, Daddy. is insane.
All of that paired with a soundbite that's going around on Twitter, allegedly of Meek Mill getting stuffed like a Thanksgiving turkey by Diddy, that paints a full picture, all right? And it's not unusual for a fun good night with the homies to end up, one of them gets cored like an apple.
On April 3rd, Disney will be hosting its annual meeting of shareholders, and we need you all to vote for Disney's nominees. Voting is easy. You can vote electronically or by good old-fashioned mail. All electronic votes have to be submitted.
It's not unusual. I'm not speaking from experience. I'm just a guy. Oh my God. Holy fuck. That's real, isn't it? I bet that's real. No, it's not. It's alleged. Not including the funny little miniature dramas that were sparked from this lawsuit, it also alleges that Diddy would constantly solicit acts from Jones or force Jones to have sex with sex workers, which is very, very, very odd and classic using your power to influence and intimidate and control someone, which is Epstein style stuff, I mean, this is we've been here before. He also made promises to Jones like he would win a Grammy if he just magically, connected. He just docked, if they docked with one another. He offered him $250,000 to purchase some instruments and also offered him ownership of a $20 million home in Miami, which is fucking crazy. Oh wait, you mean this home that's being raided by the Department of Homeland Security?
We're told this is part of a federal investigation into human trafficking led out of the Southern District of New York. Once again, you're looking at live pictures from the home of Sean Combs, also known as Diddy. HSI is on the scene right now.
Wow. But there was trouble in paradise when Diddy would go from promising Jones the world to threatening him with harm. Diddy allegedly said that he was willing to hurt his own mother to get what he wants so he wouldn't think twice about harming Jones. Now, things get way darker, way worse. In July of 2023, there was a listening party in which Jones would solicit several for the party. At least 5 of them were under the age of 16, which is all crimes, all illegals. Everything is illegal about that. Also, all the women drank liquor, according to this document. Jones tried to leave the party, but DIDDIE forced him to stay. Jones was also to be passed off to Cuba Gooding Jr., that guy who played in some movies, I think he's been in some movies. While on a yacht, Diddy wanted Cuba to get to know Jones a little bit better, and Diddy left Cuba and Jones alone, which is very odd. I didn't know P. Diddy was that, like that famous or that powerful. P. Diddy net worth. Oh, I feel like when you get that powerful, you just get real evil, It's like you can't help it or something. It's like a thing, you just, you're not a person anymore, really. You're just a thing. You're just a thing that all your worst traits that are in every human are just hyper exaggerated when you don't have anyone to punch you in the face or tell you no, because you have so much money. You have just so much just influence and power. I don't know. Cuba Gooding Jr. allegedly began Mr. Jones, Little Rod, touching his butt crack and stuff. But obviously Little Rod rejected his advances and pushed him away, which is, good, I guess. This is Cuba touching him forcibly. It seems like bro kind of shit. I've had some bros do this before. You what? This is like a little bit too close, I guess. But all this, though, is irrelevant because Cuba Gooding Jr. pled guilty to quite literally doing this. Like, this is cut and dry. Cuba's not he's a bad guy. There's 30 women that came forward in 2022 with accusations of unwanted touching by Cuba Gooding Jr. So he's kind of a piece of shit. Allegedly. He pled guilty, though, of course, after he denied all charges and contended that he was unfairly tarnished in the era of Me Too, which is such a funny thing to say, and then plead guilty. Why are so many people such pieces of shit? One thing I did notice in this is that Cuba Gooding Jr. is not a defendant in this case, so there was inappropriate touching, but he's not actually listed as a defendant, so he doesn't care enough, I guess. I'm not exactly sure what that is, but Diddy also allegedly had his head of security, Fahim Muhammad, this guy who looks like an absolute badass who could make people and problems disappear for DIDDIE. Fahim Muhammad What a nice guy. His work experience. Combs, why even have a LinkedIn if you're just gonna work at one place? Oh wait, co-founder of Oasis Investment Group, self-employed. Jones was terrified of DIDDIE, and he felt like he couldn't tell him no, which is classic in these cases of, you know, someone incredibly rich and incredibly powerful just exercising their influence over someone not as rich and not as powerful. It's sad, it's up, it happens quite frankly all the time. When Jones would try to express his discomfort to Diddy's chief of staff, Christina Coram, she would downplay it and gaslight him into thinking it's no sort of big deal. These acts were Mr. Combs' way of showing that he likes you. Oh, he gets a little touchy, you know? He just gets a little touchy. We don't call him Mr. Combs touchy for no reason. It's because he's a fucking freak. Christina allegedly was also the one that would source drugs for DIDDIE for his consumption. I'm gonna get someone who can source various goods for me, like foods and things like that. Not drugs, because I don't do drugs, I don't drink, I don't do any drugs except for copious amounts of CBD oil all the time. All right, because it keeps me, you know, keeps me level, keeps the head not hurting. I got chronic migraines, chronic masturbator, migraines. I'd like to get a guy for sourcing things, but not drugs, really. That seems weird. KK is now being called the Ghislaine Maxwell of the Diddy Enterprise, the Combs Network. This, by the way, is in the lawsuit itself. So you're noticing a lot of bad stuff. It's not only SA, but also accusations of sexual trafficking, which is very, very, very bad. And we've got a Ghislaine Maxwell to a DIDDIE, similar to the Jeffrey Epstein sort of thing that we covered in a previous video and that everybody knows about. Basically, this lawsuit saying there's a lot of bad stuff, and you know, how can you prove it? Well, we'll get into that. There's a little more though. Diddy's staff also were instructed to call Mr. Muhammad if they were ever pulled over by police in Miami or California. A little corruption style there. I'm not sure what that even is supposed to mean. In September,
hiking, biking, Bigfoot sighting, and
of 2022, there was also an alleged shooting that took place at the Chalice recording studio in Los Angeles. There was a heated altercation, allegedly, between Diddy and his son's friend G, where Jones then heard shots ring out and saw Diddy and his son leave, and G was in the bathroom in the fetal position bleeding because he had been shot. Jones moved him to the front of the studio where an ambulance came and picked him up. Also, Jones alleges that Diddy told him to tell the police that the shooting took place just from a random drive-by shooter, which is absolutely crazy. I don't know if he did that or not. The lawsuit then goes on to say that the LAPD spent hours in the restroom and they didn't make any arrests and didn't even clean the blood floor, which I don't believe they do that anyways, but Diddy hired a cleaning crew to clean it up the next morning. Hours! I don't know why hours. There were no arrests. I'm not sure what. Maybe they were paid off. Maybe that's what they're alleging here. Who knows? The shooting was definitively concluded to have taken place about a block away, a half block away, and was the result of a robbery. And then G made his way to the studio because he was familiar with P. Diddy and his son. And even the Chalice recording studio where it allegedly happened, Jones is alleging this. They made a statement in regard to the shooting. The amended filing includes a message. The shooting occurred a half block away from Chalice, and it was the result of a robbery. There are police reports corroborating this. Please wait for facts to come out before you start contributing to the defamation of our organization. But Jones maintains that police saw the blood in the bathroom and they still went with the bogus claim. This is all Jones. This is saying a lot though. And the reason Jones is saying this, I believe, is because of the perceived connection and ties to law enforcement through Muhammad and his reputation of having people and problems disappear or whatever the they were trying to say. 2 months later, police arrested 3 individuals that were allegedly involved in the shooting and a string of robberies. That includes the shooting of G on September 12th, 2022. Now, come to present day, P. Diddy's homes and businesses or whatever have been raided due to this trafficking lawsuits, I think.
Overnight, heavily armed federal authorities staging coordinated coast-to-coast raids at properties belonging to music mogul Sean Diddy Combs. Homeland Security Investigations team seen descending on his multi-million-dollar home in Los Angeles, going room to room and hauling away boxes. Across the country, more investigators swarmed the rapper's property in a wealthy section of Miami, appearing to carry out a laptop.
I'm not sure. He flew away like a large bird, and he escaped this, and now he's in the Caribbean. As far as we know, this shit just like started happening yesterday, basically.
It's a
Appreciate the follow.
Tuesday morning here in Antigua, and we're here because of this aircraft in focus. So here we see a black Gulfstream registration number, the tail number is November 1969 Charlie. And as we understand it, this Gulfstream is registered owner is Sean Diddy Combs.
So that fucking escaped to the Caribbean, as far as we know, on his little PJ.
I don't know. I
but
think
his
I have
many
to go into the
homes
pools and hot
mansions
tub
have been
section
raided
for
by
that.
Homeland Security. Laptops, phones, all that shit have been seized.
A Homeland Security investigation spokesperson told ABC News on Monday, quote, earlier today, Homeland Security Investigations New York executed law enforcement actions as part of an ongoing investigation with assistance from HSI Los Angeles, that's Homeland Security, HSI Miami, and our local law enforcement partners.
There are sources that say he was in Miami when his Miami home was raided, and the speed at which they raided and the violence and momentum that they approached that whole situation with suggests that they were worried about evidence being destroyed and deleted. It was a old-fashioned no-knock. It was pretty interesting to see.
Multiple sources tell NBC News Combs was in Miami during the searches and had several phones seized before he was scheduled to leave for a trip to the Bahamas.
The speed at which it appears these raids were conducted suggests that agents were concerned that they needed to secure evidence quickly and prevent anyone from destroying evidence before they got there.
Why exactly was he raided? It wasn't all because of the first lawsuit. It I'm sure had something to do with it, but there was a lawsuit open in New York that alleges insane levels of trafficking, human trafficking.
According to NBC News, a source indicated that federal authorities have interviewed 3 women and 1 man in New York in connection to allegations of trafficking, assault, and the solicitation and distribution of illegal drugs and firearms, and that interviews with other individuals are also planned.
And on top of this, quite a few people have come forward saying that bad things happen between them as underage thems versus P. Diddy. It's pretty.
Growing a startup is tough.
Pretty bad. There was a woman, a Jane Doe in 2023 that opened a suit against him as well, and this is part of a string of many other women who have raised their voices against Diddy recently, and Jones, Little Rod. Apparently, P. Diddy preyed on vulnerable high school-aged teenagers.
How would you like to be known professionally as Little Rod?
There's a lot of stuff that's lining up here. It seems like the buck has stopped, though, for Mr. Diddy. So many lawsuits, so many allegations. I don't think I've ever seen so many outside of Jeffrey Epstein. All these allegations, to me, are insane, and the fact that they are leading to more and more allegations that are coming out, it inclines me to believe it is true. As just someone that, you know, is watching, plus the Homeland Security raid, you know, people actually being arrested, it's crazy. And apparently Diddy was in Miami when his home was being raided. Sources
I'm gonna hop off.
That TMZ has a video of him outside.
Nolly, I'll message you on Discord before I get back on, and then we'll see if me, you, and Steve can get in some nice CS:GO time. A little bit of Dust too, maybe some Mirage.